Hello everybody, this is a bonus video to the EURUSD day trading course, and I'm going to talk about the trend continuation pattern. This is one I've traded off and on for a long time, and then recently started incorporating it back into my trading for Forex. And mainly it was because I'd been trading a bit of stocks too. I got comfortable with the pattern again, and I guess prior to that the other patterns were performing fairly well. So there wasn't a whole lot of incentive, but at the same time, if we can make more money, why not? Also, we started to see a lot more movement come in around the time that I'm making this video. So it's May of 2022 when I'm recording this. And we've had a lot more volatility than we had in prior months. And it's sort of highlighted not so much a weakness with the other strategies, but with the other strategies, when we just get the price running and it doesn't stop, it just keeps going, we might not get a double pump or a rounded top pattern, for example, or even a snapback. So the trend continuation pattern fills in that sort of gap in the strategies where if the price is really running, we can use this strategy. And it's probably one of the simplest ones really in terms of its structure, and you've already basically traded it. If you've traded the rounded tops and rounded bottoms, this is basically the right side of a rounded top pattern. You have a down move, a pullback, and then as soon as it starts to transition back to the downside, we're taking our short entry. So this is very much like a rounded top, but in this case it can occur anywhere within the trend. And on the way up, this would be like the right side of a rounded bottom. You could have your waves moving lower, then you have this move up followed by a pullback, and then we enter as the price starts transitioning back to the upside. Same 2.5 to R, 2.5 to 1 is the typical reward to risk on this. And just like a rounded top, we ideally want to see clean waves, and by that I mean if the pullbacks are really jagged, making lots of like little lower swing lows, it's going to be harder to trade this pattern. Typically it's going to be easiest when we're seeing just move up, 2 or 3 candles down, and then it starts moving up again. When we're seeing movement like that, and we usually have some time before where we can see it, we can see here drops, 1 bar pullback, drops, all green candles, drops, move lower, all candles drop, 3 green candles in a row. So we can see our trigger is when the price drops below a low of the candle in one of the lows in the candle during the pullback. And we can see it's just moving quite smoothly. Same with up here, we have this move up, pulls back, and once the price starts moving above these prior candle highs, that's our trigger. So we've had pretty clean movement so far within the day once I started trading here. And then we'd had this move up, and the price just drops. Like the rounded tops, we also want to be a little bit aware of the stop loss size. How big are these candles? If the candle's huge, that's probably not a great trade. If our stop loss is going to be 5 pips, that means our target's got to be 12.5 pips. That's getting pretty big for most days to just capture a price wave. Might be okay some days, but we just want to be aware of the stop loss size. So this one could have maybe got an entry right there. We would have been stopped out, but then this one just pulls back. We get the transition to the upside, transition being we're moving lower, and then the price moves above a prior candle high. So entry was on this bar here when we took out the high of this green candle, and it stalled right near my target, so I opted to just take my profit on this one. And so stop loss size, clean waves, all things we already know from rounded tops, rounded bottoms. These are the patterns we're looking for. I took a little bit of a break here on this day, but then we have this sideways choppy movement and then a nice surge out of it. We have a pullback here, and this would have been a nice one to get into if I had been around. Then we have a flip side. This is basically, like I said, this trend continuation pattern is pretty much exactly like rounded tops and rounded bottoms, just the right side of it. Here we can see this one's a little bit, would be considered extended for a rounded top because we are well outside the prior low here. We had the move up, pull back, move to a new high. So once we drop below this area, below this green candle and this red candle, that sets up our rounded top. We're just waiting for the pullback. This one drops quite a bit below, so this would be more a trend continuation pattern because we've already had this really sharp move. And we just start pulling back. 1, 2, 3. We drop below that, the low of one of those candles in the pullback, and we enter our short trade. And that one dropped very quickly. And then I tried to do the same thing again. This one was a loser. So we had our move down and we start pulling back. 1, 2, 3. And you can see here the price drops slightly below this little cross candle and then immediately shot up. So I was stopped out of that one. Then we went more into a rounded tops type setup. I still entered this one short based on a trend continuation. We can do that. We still had this major down move, and then the move to the upside was followed by a small pullback. But when we tried to move up, there was very little buying momentum. So that tells me still trend is still down because this is our dominant down wave. And yes, we were in a pullback and we're edging higher, but it's very weak. The price isn't accelerating to the upside. It's just barely making any progress. This was a really huge candle, so I wasn't interested in going short there. But when we try to push up again and we can't make any headway again, I was interested in taking that short. So it took a short right below when the price dropped below this green candle here. And then at that point, we enter into a rounded top type trade. We have the drop. Same thing. This is basically a trend continuation trade, but this time we have the whole pattern of a rounded top, drop, little pullback, and I'm entering right as the price drops below one of those pullback candles. And so this one I doubled up on, and I was already short, and I added to the position and was able to basically capture 2 trades in the same trade. And if you remember from the course, we can drop our stop loss. There is no extra risk. This was now a risk-free trade because once this triggered, I got into the new trade and I could drop the first stop loss down to here, and now I have 2 stop losses sitting right above this level here. So the first trade's no longer of any risk. If it stops me out, I haven't made anything and I'll lose on the one I just took, but there's no extra risk there. So it's a way to increase your profits without necessarily increasing your risk. Big drop here, and then we just start stepping higher. And I took this one based on us dropping below the candle lows of the pullback. This was still the dominant move. This was a pretty deep pullback, and the only reason I took it was because there was lots of movement on this day, and as you can see, I also trailed my stop loss aggressively. Basically, once it started dropping, I moved my stop loss to just above each candle high, and then we had some really sharp surges here, and so I just got out with a profit. So those are just some examples. Let's just keep going through some examples. This was a beautiful day for this type of pattern. Often happens on big news events. You can see the market was rocked by this CPI number, Consumer Price Index number, and just big sell-off. I wouldn't worry about this. Was more of a reversal just because there was so much movement that once we started taking out this candle, I thought there's a decent chance we'll get a bit of a bounce after that big of a drop. Not a strategy that's covered in the course. And big run up here, and then we just have this pullback. It's just stepping lower, stepping lower, stepping lower. This one, pretty deep pullback too. Under most cases, I would be considering, this could go either way. And that is a little bit what I was thinking, but you can see we do have this rounded bottom coming in here. So we had a drop, big pullback. This drop didn't make much progress. We had a really big rally up, makes a higher swing high. So that got my bias thinking more long. we pull back and we get these two nice little candles amidst all this volatility. These two little candles. So when it popped above, that's when I decided to go long. Just about hit my target. I didn't feel like holding through a pullback in that much volatility, so I just opted to get out. Another opportunity to jump in right here. We have, we've been moving up. We had a rounded bottom. We had this nice pop, start pulling back. So we had an opportunity to get long here as well. I didn't get into that one. I did get into this one though. Really big run up. Start stepping lower. We're just waiting for that pullback and for a trigger, the price to move above the high of a candle. Pops up, easily hits 2.5 to 1. Same with this one. Runs up. The uptrend's continuing. We start stepping lower, just waiting for that opportunity to get long. Nice little tiny candle there, giving us an entry there. Could have gone long here. Once we shifted to the downside, there was an opportunity to go short there. Back running to the upside, took one there, and then we had the shift to the downside. This is more just a rounded top type pattern. Takes out these swing lows, or makes a new swing low compared to this area where I had just lost on, and then we were just waiting for that transition. Another really good day for this one. I even highlighted a couple before I started, and we have the run up, pull back, a little bit of a false breakout there. Might have got stopped out on that little green candle. Chance to re-enter and go long. Runs higher, chance to enter right there. Would not have been stopped out. Did chop around for a bit though. And then another one here as we've been moving up. Transitions to the upside. This one would have been a really nice one, but we had the news announcement coming out right then. You can see nice run up, pull back. Our trigger would have been right there as it moves above a candle high. And took this one. Didn't have any momentum at that moment, but the next one worked out well. By this point, we can see that most of these trades, the price hasn't just pulled back and run, it's had a little bit of a hiccup. So we can see here, pulls back, tries to go once, and it's on the second attempt that it runs higher. Same thing with over here. It runs up, has a pullback, doesn't really go too far, and then on the next pullback it runs. So it's almost doing like similar to like a double pump. It's doing like two little wiggles before it takes off. Same thing with here. Pulls back, tries to go once, doesn't succeed, pulls back just a tiny bit again, and then it goes for the run. So this is, I'm already aware of this, and that's why I didn't jump into this trade right away. I think there was a little trigger here. Maybe it didn't quite trigger, but I was being a little bit more conservative on this entry, waiting for that, just let it play out a little bit. And we had this first pullback, and then we have this second little pullback, more like a double pump, and then it runs off, runs down. Same thing with here. Runs to the upside. We have the first pullback. Not super interested in that one. Then this next attempt, it doesn't go anywhere either. I'm more interested in that. Traded that one and then had to jump back into it again. And, we flatlined for quite a bit of time there. So nothing we can do about that. Sometimes a trend is not going to keep running. It's going to fizzle out. And I said trend in conflict. What I meant by that is that we had this drop, and then the price almost gets right back to that high. So it didn't quite get there, so it's not like we had a really strong move to the upside. We still had this down move, but then a pretty strong move back to the upside. So I felt, was this enough to turn the trend? It turns out it wasn't, because we just ended up moving sideways, but it was pretty close. We basically have a down wave and an up wave that are pretty equal in length. When that happens, it's probably better to sit on the sidelines, and if I had, I would have saved myself a little bit of money there. This day, choppy. Good to notice that over here I said waves and triggers not as clean. So this is the same thing we had the other day. If you notice, if you just look at these drops, rallies, whichever one, it's, it's not drop, move up a couple candles, and then another sharp drop. We are dropping, kind of chopping around a little bit, and then moving lower. Here we drop, we move up, chop around for a little while, then it moves. It's not just super clean price waves. And so I was aware of this, and it's just good to be aware of it, because like on these other ones, then you can just wait a second. Don't take that first trigger right away. If you know things are choppy and that on a pullback you're getting multiple triggers before the price actually runs, don't jump in on the first trigger, because if it gives you 3 triggers before the price really moves, you're going to have lost twice before you get into a winning trade. And you might lose your confidence by then. You might be stopped out for the day. So we want to be aware of these tendencies, and that goes for any of the strategies. Here things change a little bit. It's been really choppy, and then all of a sudden we have this big sell-off. And this is the first one where it's just a pullback and then boom, gone. As soon as it's one trigger and gone. So that gave me confidence to take this one. We still just had a really high momentum move, little pullback, enter into that short first trigger. We have lots of momentum going on right now. Take the trade. But then you can see over here, we start going back to this choppy type movement that we'd had before. So it just says, hang on, maybe don't take that first trigger. And I did wait a little bit. So we had a rounded bottom here. We made a higher swing high. This candle's above. We've moved above the prior swing high. And, we have this little pullback. Wasn't entering there. And I ended up entering here. So that might have still been a little bit early, it turns out. But I did think this would run to the upside if it did break out. So I took the loss there and re-entered on the next trigger, and that one was a winner. We had this nice run to the upside. We had the pullback. This one a bit aggressive again, where I knew we had a bit of a tendency to be choppy on this day, and yet I took the first trigger. In fairness, we did have quite a bit of momentum here, like we did here, so it's not a horrible trade. And I did cut my loss quite quickly. When I saw that it wasn't going to go, I just got out. So I got in right here when we had dropped. We have this green candle, and I'm waiting for a move above the high of one of these candles. So it was on this little red bar here that I got in when the price moved above this green candle. And once it started to drop, I just closed out the trade, because I already know this is a bit of a choppy day. And then the price pops up a little bit, it drops again, doesn't go anywhere, so I'm still considering that long trade. We're still in an uptrend based on this big, all these green bars here, this big move up. And yeah, that one didn't end up going anywhere either, and that's totally okay. It doesn't mean we're going to win all these. It's just a way to fill in the gaps when we do have these big running trends. It gives us a chance to short here or here, and they'll occur quite often. Like I said, I really felt compelled to add this back in because we've had big trending movements. When the price is just chopping sideways, we're not going to use this as much. We really need strong trends, strong price moves. And another thing we can look at is if you know that your stop loss is, let's say, about 4 pips on a given day, because of the volatility, you know that you're using about a 4 pip stop loss. That means you need a 10 pip target, or you're going for a 10 pip target, which is 2.5 times the 4 pip stop loss. That means that the trending waves need to be bigger than 10 pips. And we can see this based on how the price is moving. And we can see here, for example, did I put in my... Oh yeah, I said, so here was a 3 pip stop loss. So that's, we're looking at about 7.5 pips for the target. And so on a day like this, before I even start taking trades, I can look, is the price moving 7.5 pips from a trigger? So let's look back over here. We had this big downtrend, we have a pullback, and then it drops. and we can see each one of these between the lines is 5 pips. So this is about 2.5 pips. It dropped a full block here and another full block. So this dropped about 12.5 to 15 pips, just eyeballing it from this trigger. So that gives me lots of room for a 7.5 pip target. If the price is making 15 pip price waves, hitting a 7.5 pip target is no problem. Same with here. Once we see this transition to the upside, we're looking at, if we entered here, it's about 2.5 pips up to this next line, 7.5 pips, and we have a little hiccup here, and then it keeps going. So again, this is easily running 10 pips to the upside. Even if counting just up to here is still 10 pips, we have about 2.5 pips here, 5 pips, and then to this little swing high from this point to up here. Looks like, just eyeballing it, about 10 pips. Here, big run, 5, 10, easily 12.5 or so pips. Easy to make 7.5, which is what our target is if we're using a 3 pip stop loss. So that just lets us know how much movement there is and whether it's a good idea to be taking these trades. If the price waves are only moving up 5 pips and then dropping like 4 pips and then moving up like 3 or 4 pips, and it's much choppier, we're not going to use this strategy because there's not enough price. The waves aren't big enough to give us the target that we're looking for. And you could drop it, let's say, to 2-to-1 reward to risk. But ideally, we want to capture that 2.5 if we can, and we want the waves to be big enough. So we can just by eyeballing it, if we're using even a 4 pip stop loss and our target's 10, we can see that most of these price waves are moving at least 10 pips. From entering here to up to there, we still probably could have got a 10 pip target out of that. Easily hit a 7.5. That one was during news, so we wouldn't have traded that one. But here we can easily see it's taken out the 2.5 pip target, 2.5R target fairly easily. So that's what we want to look for. So that's just one other thing, and it's another strategy you can add in for the days that are really trending, and it can produce some monster days if you just get those trends. Sometimes we just have a big trend to the upside, and sometimes we get the reversal back to the downside. But you can just kind of rack up 2.5, 2.5, 2.5. And I will get out. The reasons we get out are if news is coming up, we get out. If the price almost hits our target, we have the option to close it. If it's just kind of hovering right near our target, why give up all that profit if we're at like a 2.2 target here? I might have got out of this one a little bit early. In hindsight, it looks like, why the hell did you get out there? It was dropping. But you can see it dropped, almost hit my target on this price bar, bounced all the way back up here, and then on this price bar, it just oscillated. So really, I was sitting here for like a minute and a half with it very close to my target and not filling it. I didn't feel like giving up, 2.2R for that extra 0.3R, that extra tiny bit, when, we never know what the price is going to do. It doesn't have to hit our target. It could always reverse. So if it gets close, we can close it out. There are also certain trades, like what I discussed when I have a bit of a conflict. Where was that? Where I talked about the trend in conflict here. So if we have a trend in conflict or we're uncertain about something, then we always have the option to close that trade early as well. We know that the price might go against us. We're not 100% certain about the trade. We think it could pop in our direction, so we enter that trade, but if it doesn't go quickly and it starts going against us, we can close it out. So that was basically this one here. I knew the trend was in conflict. This one stopped me out very quickly. And this next one tried to go and then just failed, and I didn't want to hold it for a full loss because I wasn't sure which way the price was going to go. So just wait for a better signal. Get out, wait for a better signal. So that's how we trade the trend continuation pattern. Add it in where you can and trade it mostly in volatile conditions. Pay attention to stop loss size as always. You will notice I don't always have these right where they're supposed to be in terms of the stop loss size, because when the price is running, it gives us a bit of leeway. If there's a lot of momentum and we break above these candles, I usually expect the price to run quite quickly in that trend direction. So here you can see I used 3 pip stop losses, but this wasn't the ideal place for most of these stop losses. Here it's like not quite below the low. Here again, it's not below the swing low. Here it's not quite above the swing high. So I picked a stop loss that I felt was adequate, but that got me into the trade, kept my risk contained, kept my target manageable for the price moves. The smaller the stop loss I can use that's adequate, the better, because then it keeps the target a little smaller, which makes it easier to hit. And that's a little bit of fine-tuning, or you could always use the normal approach of looking at whatever this last candle size was and then making sure your stop loss is just below in this case or just above in this case for the short. And that about sums it up. So add it in where you can, practice it, and I hope that helps you out. In the meantime, happy trading.